Have the best deal in the shortest possible time with this scalp strategy. This video will be with the important secret of two strategies. How to calculate stochastic RSI, having the stochastic RSI indicator formula. The next question that arises is how to calculate this indicator. Before the explanation, it is necessary to say that there is no need to perform this calculation, and this information is only for better familiarity with this indicator. The stochastic RSI indicator is obtained based on the RSI indicator as specified in the formula. The RSI indicator has an input number to set, usually 14, that tells the indicator how many periods time frame to check. For example, in the daily time frame, the number 14 means that the RSI will include the periods 14 days in these calculations. The values obtained from the RSI are then entered into the stochastic RSI formula. With this explanation, calculating the stochastic RSI indicator can be divided into 4 steps. Calculation of RSI indicator for 14 intervals or other values. 2. Taking to the last value of RSI and its highest and lowest value in the 14-day interval. 3. With the addition of a new time frame, 14 new time frame should be checked again in the first and second steps. 4. At end of each time frame, the stochastic RSI value of the value for the new time frame is recalculated using only the previous 14 times frame. The difference between two indicator stochastic RSI and RSI. These two indicators are very similar to each other, but the stochastic RSI is created based on a different formula than RSI. If we want to talk about it a little more specifically, the RSI indicator is a derivative of the price of the assets we are considering. That in the calculation formula of this assets price indicator, it is used directly. While the stochastic RSI indicator itself is a derivative of the RSI indicator, that is, in the calculation formula of stochastic RSI, instead of directly use the asset's price, the RSI value of the asset is used. As a result, we can say that stochastic RSI is the second derivative of the price offered in the market. I will be happy if you like it, and now we'll go to the secret of this strategy to work with scalping. To this, we added the EMI indicator and stochastic RSI chart, and after the EMI length settings, we change it to the 20, and then both are visible in the chart. In 4-hour time frame, we look for an order in the block, the area where the pump and dump we created and the supply and demand were more, behind the confirmation candle. And then in the 1-hour time frame, we identify the trend. Then we draw a downward trend, upward trend line, assuming a downward trend. Then we go to our trading time frame in 5 minutes. There is EMA and stochastic RSI. For example, whenever the EMA line moves to top of the price, or the stock goes high and the stochastic RSI break the below line, the red line from top to bottom, and we will open a sell transaction after confirmation. The stop of the transaction is confirmed behind the candle or the post order block, and TP can be used. The number of candles with the previous trend line can be used TP. Transaction is found in the same way that the price hold, approach or channel and support, and hit or EMA whenever it goes above the price. That is, the first EMA is behind the price or below it, and the stochastic RSI is also the below line. Cut the red line up from the bottom. A buy signal we will obtain, a stop buy will be obtained behind the same order block. Of TPs, the number of collisions with the previous trend line or levels. This strategy has a minimum rate of 16 because it deals with important area and support and resistance, and you can also add price action. Thanks, there will be more video about strategy until this video.